Thank you again. I mean, wow. We just went through a lot there, Tim. I mean, when you started to digest the news from the weekend and then you saw the reaction, what'd you think?
Well, first of all, kudos to Debo, who was out on this news well before the market and a few days back, really covering a story that I think caught a lot of people by surprise. But, you know, the reality of what's been going on in the chip wars with China is, you know, what's the expression? I think necessity is the motherhood of invention, and restriction might be the motherhood of invention here, too. And in terms of what's real and what's not, in terms of the cost to develop this, I think there's still a lot of questions. But there's no question, and Debo emphasized this, is that this is a case where what we have here is a large language model that is doing things a lot more efficiently than some people that have been in the market for a long time. So I don't think this necessarily calls into question the 2025 capex. And remember, this is a big week for big tech. We're going to be laser focused as we were. We're only a few days from Meta telling us about $65 billion in capex for 25. So think about that. But it really does call into question 26. And that's something that if you look back to some of the chip players and NVIDIA notably, that is where valuations are looking at. Look, it comes back to also just positioning in markets. And this is here also what we talk about is just what the markets have. And what the markets had was a very crowded trade, a case where you had a dynamic even just 3-4 days ago. And maybe there's a coincidence to Stardate or not, or, you know, Star Trek or wherever.
Stargate.
Yeah, exactly. But the bottom line here is I do think this is the kind of news that the market needed. And I do think this is the kind of news that also Carter's going to have a great call on what's broken, what's not on Chartland. But there's still so much faith that had been placed in AI and spend and the impacts that today is at least a wake-up call.
Yeah, Carter, I wanted to go to you. I feel like I can't go too much further into the show without talking about the impact a little deeper on NVIDIA stock today. I mean, do you think that was overblown? And then what about some of the names that are competing with NVIDIA? I mean, because this opened the door for them. Maybe they don't have to spend as much money.
Sure. So obviously, in each case, it's different, NVIDIA versus Avago versus Taiwan. But if you look at ARTI, which is an ETF that covers all AI, and it has those names in it. I mean, it's an 8% drop today, and one could say, I mean, that's a major setback. And yet, the other way to interpret it is you just went back to where it was 2 weeks ago, right? So if you think about extreme weakness on any given one day, this kind of thing, typically the precondition for that is one of two things, and it's the exact opposite. Extreme weakness comes from something that's been really bad in an established downtrend, and then has a collapsing type day, meaning a sick asset that has yet further dropping and collapsing, or it comes from the condition that is happening today, something that's been very, very strong, crowded, complacent, and then out of nowhere you get a drop. So that is, of course, the circumstance. You use the word crowded or complacent. And so the question is, and this is unknowable, right? I mean, let me just say something. I think I'm as qualified as the planet to determine whether tomorrow is up or down in these stocks, and I have no clue. Okay, so let's get that out there. It's usually right to resist the temptation to buy into a drop in gap. There's an expression called let the dust settle. And so it's tempting to do it. But usually it's wrong. Let a few days pass. And some people, I know you like to refer to a 3-day rule or a 10-day rule. I'm not sure there's a fixed rule, but the concept of let the dust settle, jumping in just because something's down, usually is a bit impetuous.